Welcome back for another top-notch video. This week, guys, we'll be talking about the week of 11 January 21 to 15 January of 21. Biggest thing with this week, guys, is we want to talk about some of the general trends we saw. There were some trend changeovers on the charts. If you're new here, please like, subscribe, or share. We do a weekly stock video for you guys, and I would really appreciate to have you guys tune in every week. That would be awesome. If you are in the TSP or the Thrift Savings Plan, we talk about that for government workers, or if you are in Roth IRAs, we talk about those as well. If you're in the TSP, we talk about the C, S, I, and F funds. That's for thrift savings. And for those that are in brokerage IRAs or just the general market funds, we talk about the ETFs, which are IVV, VXF, EFA, and AGG. Now, what do all these boil down to? Basically, these funds equal each other. And this is going to be your S&P 500 funds. This is going to be your small caps. This is going to be international markets, and this will be bonds. These are the general funds we talk about during this channel. Again, if you guys like this video, please like, subscribe, or share. We do kind of a general overview and then get into a technical analysis every single week. So let's dig right into it. The first thing we like to look at is a TSP website, TSP Talk. Do some great commentary there. They put out a good chart in regards to the weekly trends of what we saw for the week. As you can see, the F fund was up just a little bit for the week. The C fund was down 1.5%. S fund was up a little over 1%, and the I fund was down 3.6%. Very interesting. We don't talk about the life cycle funds, so very interesting there for the year. As you can see, the S fund was really shot off to a good start, whereas the S&P 500 fund, C fund, is still kind of lagging here for the most part. The other thing we want to show you guys is the chart for the week. So this is what markets did throughout the week. Obviously, we have the C, I, S, and F funds up here as well. If you're wondering what that G fund is, that is a cash fund. Kind of stays close to 0%. So our equity funds, which are going to be our C, S funds, or IVV and VXF funds, the S fund did gain a little bit here, but our other equity funds, internationals, in the S&P 500, we are underperforming for the week, for just the second week in January. Let's do our very broad overview, and then we'll move into a technical analysis. The S&P 500 here, as you can see, has moved outside of its trend line for the most part, which is a good sign. Let's see if we want to see this hold in the future. We're going to show some technical analysis later on that shows some trouble moving forward with that. But it is outside its trend line here. Could see that pop back in this week based off of technical analysis moving forward. With small caps, we are running this middle line here in the middle of this trend line. So still very good of where we're at, but it's struggling to break that. And we could see that come back down probably to the lower end of that trend line based off technical analysis. I'll show that a little bit later on. EFA, no issue as well in that trend line. Been in that trend line for quite some time. Popped out mid-December for a little while, but then we were back in that. So that's international markets, or the I fund. And then the last thing we have is bonds, which looked like they were going to break out towards the beginning of the year. Saw this basically this trend line drawn in here. Popped out for one day, and then it was a failed breakout. Really broke down here. Having open gaps or waiting for that to be filled. But that's a pretty big drop and the big beginning of 21. And we'll go through our technical analysis as well with that one. Moving on to our technical analysis is IVV, the C fund, or the S&P 500. Like I mentioned in those other charts, above the trend lines here, and we are also above the moving averages. Now, I really could see this probably pop back down into somewhere in here with this trend line and moving average based off our technical analysis, which I'll show you right now. This is going to be our technical analysis. If you're new to our channel, price is up here. Okay, represented with the green and red boxes, and then these are our indicators down here. We keep it very simple for you guys. We like to check just two indicators to see where price is going. So the first indicator we look at is the derivative oscillator. This is right here. It's going to be your green and red bars. When price is going up with green bars up to the top, price continues to move up. When the green bars start to come down into the red bars, price tends to go down. So that's kind of how we monitor price, and what we look at is this indicator is just to see up or down movement with that derivative oscillator, like I mentioned, to see where things are going. So obviously right here, you can see we're going up here, and we were going up here with price. So that's our first indicator. The other indicator we like to look at is the PPO line. All right, that's the price percentage oscillator. What that is this blue line over the red line. So the price percentage oscillator is the blue line, and the red line is the moving average. When the blue line is above the red line, price tends to go up and increase, and we want to be in the market. When price goes below the red line, we want to be out of the market. So we use these two indicators to kind of beg where we should be with price, and we kind of give a green, a red, or a yellow rating of where we're at currently. And we also look at long-term charts versus short-term charts in regards to where we think the trend will go. So saying all that, basically technical analysis, I don't want to explain this for the other charts, but is this a red, green, or yellow signal for if you are in or out of the markets? So for IVV, as you can see here, our derivative oscillator was moving up for weeks here. We saw very minimal movement. We saw it move up and up. As you can see, the green derivative oscillator on the bottom there, 2.75 towards the end of the year. Really jumped up to 3.3 at the end, very end of the year. Really good sign that first week of January on the 8th. But now the second week, we really popped down. We're at 3.3 there, 3.0. And then we dropped to 2.6 on the derivative oscillator. That is a negative sign there. And then our price percentage oscillator line is above our moving average, so that's positive. So we have one negative and one positive sign. That is a yellow indicator for us, or proceed with caution indicator in regards to this fund moving forward. So we want to be cautious with IVV or the C fund moving forward. Let's get into our next fund, which is small caps. Where do we sit? VXF, or the S fund, as you can see, above all the moving averages here. Trend line, we are still in this trend line here, but interestingly enough, it's starting to come down here, and we could see that pop down back to here just before it continues maybe in an upward trend. For technical analysis purposes, let's look at VXF, and as you can see here, it's our same indicators, don't need to explain those again, and we're seeing some negative signs here as well. Ever since mid-December, our derivative oscillator has dropped from 6.25 down to 5.7, down to 5.3, down to 4.8, so that is a lower sign. Now, price has not reacted to that, so that's not normal usually, but we do have one sign that is positive, our PPO line. So this is also going to be a yellow or proceed with caution symbol for our market. We have one good sign, one bad sign, so that is a yellow indicator on our stoplight of proceed with caution for VXF. Moving on to EFA. With EFA, we're starting to see this thing. It was moving out above its trend line here. We are above the moving averages, so that is good. And now it's starting to pop back down a little bit. It did cross that line there, so we want to also proceed with caution there. But let's look at the technical analysis on EFA. With EFA, as you can see on our weekly long-term charts, we have some negative indicators here as well. As you see, the derivative oscillator has really dropped off 1, 2, 3, 4 weeks now. That is not a good sign. Price has not reacted. It's kind of been intermixed here with 2 down weeks and 2 up weeks. Our price percentage oscillator is still green, so that's a negative, a red sign, and a green sign, so that makes this a yellow. Proceed with caution with EFA moving forward. The last thing we're going to go over is AGG or bonds. So with AGG or bonds, as you can see here, the market has dropped off towards the beginning of January and has not really recovered yet. We are now below all the moving averages and the trend line, this middle trend line. We are still in this bigger trend line here, which is a good thing, but let's look at the technical analysis for AGG or the F fund. And as you can see here, this is a good example of a red sign here. We have our derivative oscillator really dropping off here, a negative 1.1 there, and then a negative 2.2 there. Really dropping off there, and then our PPO line is below our moving average there. Price is reacting strongly to that after these 2 weeks. Looked like it was going to pop out here. It did not. Price really decided to head on down from that. And this is a red sign here, guys. You do not want to get involved in this fund. That is not a good place to be. Not yellow or not green. It is red for AGG moving forward. That, guys, is all of our charts for the Top Notch channel. I'm going to pull this up one more time here to kind of show you where our allocation is at. So on the Top Notch channel, we are currently sitting in the G fund or cash. We just were looking at those cautious signs for our equity funds, which is IVV and VXF. And we're just not ready to proceed with those just yet, being cautious. We were looking for a kind of a green sign to get in or at the bottom of kind of a red sign to get in, and we just really do not see that right now. So we're going to have to hold off and just wait and see where charts go from there. So that is what we are doing on the Top Notch channel. Our new monies or allocations are also going to the G Fund or a cash money market account for right now, and we'll see where that will take us. We really don't feel too bad because, as you can see with funds, the market's only up 0.3 for the year on the S&P 500 fund. Of course, the S fund is rocketing up, but we want to be careful with that recent gain to see where that will go in the future. We did not go over short-term charts on this video. Want to just see if you guys like those. Please write in the comments below if you want us to continue with short-term charts or if you just like to see the long-term charts. Again, we really appreciate you guys watching. Please like, subscribe, or share. That's another top-notch video. We'll see you guys next time.